Dear student, today we will be discussing the single entry system in accounting, which is a method used primarily by small business. Meaning of incomplete records: when accounting records are not strictly maintained accounting according to double entry system, these records are called incomplete record accounting records. Generally, cash account and the personal accounts of customer and creditors are maintained fully, and other accounts are maintained based on necessity. Under this, some transactions are recorded fully. That is, for some transaction both the debit and credit aspect are entered. For example, both the aspects are entered for cash received from customer and cash paid to creditors. Some transactions are partially recorded. That is, only one aspect is entered. For example, expenses paid may be entered only in cash account. Some transactions are not recorded at all. That is, both the debit and credit aspect are not entered. For example, depreciation on fixed asset, hence these are usually called incomplete records. It is an incomplete and unscientific way of bookkeeping. It was called single entry system of bookkeeping. Features of incomplete records: it is an unscientific and unsystematic way of recording transaction. Type of accounts maintained: in general, only cash and personal accounts are maintained fully. Real and nominal accounts are not maintained properly in the single entry system. Lack of uniformity: there is no uniformity in recording the transaction among different organizations. Different organizations record their transaction according to their needs and convenience. Due to the incomplete information, the inaccurate records of accounts, the profit or loss calculated from these records cannot be relied upon. It may not represent true profitability. Assets and liabilities may not represent a true and fair view of financial position in the single entry system. Suitability: only the business concerns which have no legal obligation to maintain books of accounts under double entry system may maintain incomplete records. Hence, it may be maintained by small sized sole traders and partnership. The single entry system is suitable for small sized sole traders and partnership firm. Maximizing up of personal and business transaction: generally personal transaction of the owners and mixed up with the business transaction. For example, purchase of goods for own use may be mixed up along with business purchases. Limitation of incomplete record: lack of proper maintenance of records, difficulty in preparing trial balance, difficulty in ascertaining true profitability of the business, difficulty in ascertaining financial position, errors and frauds cannot be detected easily, unacceptable to government and other authorities. Here, this is the difference between incomplete records and double entry system. All personal, real, and nominal accounts are opened in the double entry system. Only personal accounts and cash account are opened in the single entry system. Preparation of trial balance: trial balance can be prepared in double entry system. Trial balance cannot be prepared in single entry system. Double entry system, accurate profit or loss can be found because through trading and profit and loss account. In single entry system, the profit or loss cannot be found normally in absence of trading and profit and loss account. Double entry system is suitable for any type of business of any size. Single entry system is suitable for small businessmen. These are all the difference between double entry and single entry system. Methods of calculation of profit. There are two methods of calculating of profit: ascertaining profit or loss from incomplete records through statement of affairs, preparation of final accounts from incomplete records. Ascertainment profit or loss from incomplete records through statement of affairs. Ascertaining profit or loss from incomplete records through statement of affairs. Under this method, by comparing the capital at the beginning and at the end of a specified period of profit or loss is found out. Any increase in capital is taken as profit while a decrease in capital is regarded as loss. This method of ascertaining profit is called as statement of affairs method or net worth method or capital comparison method. Calculation of profit or loss through statement of affairs. The difference between the closing capital and the opening capital is taken as profit or loss of the business. Due adjustments are to be made for any withdrawal of capital from the business and for the additional capital introduced in the business. Take the closing capital as the base. Drawings made during the year should be added with the closing capital. This is because drawing would have reduced the closing capital. Additional capital introduced during the year should be subtracted. This is because the additional capital introduced would have increased the closing capital. This will give the adjusted capital. Adjusted closing capital equal to closing capital plus drawings minus additional capital. Here this is the format is used to find out the profit or loss. Capital at the end of the year, add drawings during the year, less additional capital introduced during the year. The amount is adjusted closing capital less opening capital. The balancing figure is considered profit or loss for the year. This is the second method to find out the profit in single entry system. Statement of affairs. A statement of affairs is the statement showing the balances of assets and liabilities on a particular date. The balances of assets are shown on the right side and the balances of liabilities on the left side. It is prepared from incomplete records to find out the capital of a business unit on a particular data. The difference between the total of assets and total of liabilities is taken as capital. Capital is equal to assets minus liabilities. This is the format of statement of affairs. Liabilities, sundry creditors, bills payable, outstanding expenses, overdraft, assets, cash in hand, cash at bank, sundry debtors, bills receivable, stock and trade, prepaid expenses, fixed assets. The balancing figure is considered as capital. Preparation of final accounts from incomplete records. When books of accounts are incomplete, information regarding revenues, expenses, assets, and liabilities is not known fully. Steps to be followed to prepare final accounts from incomplete records. Opening statement of affairs is to be prepared to ascertain the opening capital. Missing figures must be found out with the available data. This can be done by preparing memorandum accounts or by making necessary adjustment to the existing figures. For example, it may become necessary to prepare a cash book to find out the missing items such as cash purchase, cash sales. By preparing total debtor account and total creditor account, credit sales and credit purchases can be ascertained respectively. Bills receivable account and bills payable account are to be prepared to find out the balance of bills receivable received and bills payable accepted respectively. The final step is to prepare trading and profit and loss account and balance sheet. Formats of important accounts, that is total debtor account. Total debtor account is helps in find out the credit sales of the concern. And format of bills receivable account, this is helps to find out the bills receivable received during the year. Here, format of total creditor account is used to find out the credit purchase made during an accounting period. Bills payable account, this format is used to find out the bills accepted during an accounting year. Dear student, today we explored the single entry system, understanding how it works, its advantages for small business, and some of its limitations compared to double entry accounting. Thank you.